Oh, good afternoon, Matt. My name's Andrew McIlwain. I'm the Managing Director of Investigator Resources. Investigator's prime asset is the Paris Silver Project, 53 million ounces of silver in the ground in South Australia. Australia's highest grade undeveloped silver project, and we've got a few other strings to our bow as well.
You do. And to release any value, you're going to need some money, which you've done today. Why? How much have you raised, and why? And where's it come from?
Well, look, yeah, very timely to be able to present tonight. We'll come out of a trading halt tomorrow morning. We've raised $4.2 million, a little over at about a 15% discount to our last traded price. So the placement price is 4.2 cents with half an attached option. So quite an attractive raising, really well subscribed, in fact, way oversubscribed by investors. A lot of our major shareholders have come in, but importantly, our largest shareholder, Jupiter Asset Management, will backstop their 15% as well. So great vote of confidence from the Jupiter guys.
Well, absolutely. Nice way to end the year, obviously. Now, last time we talked back in November, we had a sort of technical session, quite a good one. I thought definitely well worth watching, and we'll put a link below to that, just trying to understand how you're going about doing what you're doing. But now with this money on board, is that what are you going to be using it for? Because I couldn't help but notice the Tungsten project that you're doing an earn into. What's the plan for next year?
Yeah, sure. Look, the Tungsten project's not distracting us from our main game, which is our Paris Silver project. And one of the things that it's great to be able to update listeners on is that we've negotiated access to an extension of the Paris area. We had one end of the pit that was constrained by some traditional owner or some Aboriginal heritage areas. Over a period of time, in fact, over 3 years, we've worked with that traditional owner group to identify and understand what their concerns were. They've, in fact, now recognised that there's really no importance to this small area at the end of the pit. And it's given us an opportunity. We've got an extra 200 metres of an 800-metre resource area that we're currently drilling at the moment. So quite an opportunity to step out. Without doubt, we'll get silver intersections in that, but that's going to grow the resource for Paris. And it's one of the reasons why we've sort of taken our foot off the gas on completing the DFS, because we knew if we could get access to this area, we could put some more ounces in the project, and it would make for a more viable project.
Right, okay. So taking your foot off the DFS, I mean, look, I don't think it's unusual in this environment for companies to be doing that, because they're slightly concerned at the reaction they're getting in the market, which is a big shrug of the shoulders. So it kind of stretches that or delays that. Was that the intent here, or was it sort of genuine attempt to scale this thing?
Look, genuine attempt to scale it. We really had to balance the importance of this area whilst we were negotiating its release. And look, to be quite honest, we were very humbled by the approach from the traditional owners, and in fact, it didn't cost us anything to get this area released. They have put us on notice they're coming later when we want to go into production, but what it does, they recognise that the project, if we can grow it, then it's got a greater chance of moving forward. So people have asked me, are we going to get what percentage uplift? It's very hard to predict that, but we'll certainly add ounces, add value to the project. You're right, we raised money and we were very, very pleased and a little taken back by the quantum, but it's about the silver bugs. Everyone sees us as a proxy for silver investment, and we were basically overrun by offers today. We've scaled back, and as I said, we'll take $4 million. We wanted to do a placement at the end of this year so that we didn't go into next year. We've got quite a well sort of enunciated program of work next year, and it would have come to a stage where everyone was looking over their shoulder wondering when we were going to do a placement. We've cleared the decks, we've got money in the tin, and we're right to move forward for 2023.
Right, but why the kind of slight segue off to Tungsten? I get the kind of addition of the silver ounces, but that wasn't just it. Is there some diversification, risk mitigation? What's the thinking behind it?
Yeah, look, since I've been involved in Investigator for the last 2 or 3 years, I've always said that we'd like to have another project. I've probably made the comment that we've looked at a range of gold opportunities, but there are no cheap, high-margin gold projects around. And in fact, a few people have bought the ones we looked at and maybe haven't gone as well as they'd hoped. But so we've been very judicious in what we wanted to get into. A little bit of my background is I operated a tungsten project in Spain for a couple of years. I understand the market. I understand offtake agreements and where the value can be added or destroyed. and also have 15 years of experience operating in the Northern Territory. So we jumped onto this project. It's been around for a while. It's been unloved. The company that had it didn't have enough money to take it forward. They had previously completed a DFS. We think it needs a bit of a polish up. And that's what we'll do in our first sort of earn-in stage, is spend $1 million over 18 months, earning 25% interest in this project, and then represent the DFS.
Right, so the real value in it genuinely is the silver component. Because like, if you've got a DFS and you picked it up for how much?
Total spend to earn 80% will be $8 million. But if we get to spending the second and third tranches of this, we will have committed to construction of that tungsten project. Whether we do that, whether we spin it into a different entity, or whether we sell it to someone, but we'll add some value and see what we deal with going forward. So it's a little bit off to the side. The work we do up there next year will be, as we're waiting for assay results back from our drill program closer to home at Paris and regionally. So it keeps our geos active on the ground as well.
Right. Okay. It'll be interesting to see how you advance that and how that develops and how the market reacts to that, given it's got a DFS already. Can I just talk to you about you talk about this a lot. You say you are a proxy for the silver price, right? So which suggests that the market's going to do quite a bit of heavy lifting for you. What about the stuff that you're in control of? You've obviously raised this money to advance the project, albeit, by slowing down the DFS component and trying to add ounces. But what else are you in control of? What else can you do to add value?
So look, a couple of things. We have started, and as a consequence of having some money available 2 years ago, looking at regional opportunities. So we drilled a fantastic intersection at Apollo, which is 5 kilometres away from our Paris project. Best silver intersection outside the Paris resource, which we got back in about March this year. So we'll step back out as soon as we finish drilling Paris extension in January. We'll step out to Apollo and start chasing that silver intersection. A little bit further afield, we've got other tenements of probably 80 kilometres to the east, and we've got 40 kilometres of strike along similar geology. We did our first round of drilling there last January, February, and we intersected mineralisation in 24 of 27 holes, which is just a spectacular hit rate for a first round of drilling. So we'll go back to Morgans, which is this satellite area, and we'll be chasing up what was some very good silver and zinc intersections out at Morgans. So not just the one-trick pony, but certainly most of our value. Really simple. Multiply 53 million ounces by $34 an ounce, and there's $1.7 billion of silver value in the ground. Right.
Okay. But that's in the distant future. You've got a bit of work to do between now and then, right? So I think in November we had a technical session. We talked about the metallurgy and recovery rates, and ability to actually work out what you'll end up earning, not what you could earn, but what you will end up earning. So on the metallurgy, you talked about lead and potentially some rare earths, but I think there was an honest conversation about the complexity of the rare earths component. So with the silver and the lead, have you done any additional metallurgical work? Are you planning any for 2023?
Yeah, so Matt, look, thanks for drawing me back to that. A couple of things we have done on the metallurgical front is we've completed and this is all pretty non-interesting, non-sexy type, technical work in the background where we're crushing rocks, working out indexes and things. So we've done the comminution testing, which is the crushing grinding component of it. With this influx or inflow of money, it allows us to continue and complete the next MET test work, which is about a $500,000 program to identify the most appropriate route to recover the lead that's in the resource. So there's about $300 million worth of lead in the Paris resource, and in our PFS we attributed no revenue from that. So $500,000 of MET test work to identify how we get what we can get out of $300 million worth of lead. That was in the resource. It was planned to go through the plant. We just assumed we weren't going to deal with the lead to make a really simple story to start with, and now we're building on that.
Right. Okay. And then I kind of the big challenge that companies are dealing with in this environment. Obviously, we're seeing inflation numbers coming off a little bit, but in no great hurry to. They've been battling with the economics. They've been battling with the capex component. Especially now, you're obviously going through the phases yourself at the moment. Are you seeing what are you seeing out there? Are you sort of confident that you can sort of keep the capex inflationary growth on the capex to some kind of to a minimum, or do you expect there to be like some people are seeing wholesale changes about the way that you perhaps need to kind of approach the project?
Yeah, so look, certainly the cost of steel and fuel and labour has increased. Ironically, though, we've been able to attract people, and we're not talking about 100 people, but 10 people at a time at reasonable rates, not something that's 50% higher than was a year ago. So we don't think labour is going to be a major issue for us. The other side of it is, and certainly fuel, and one of the things that we left unanswered in the PFS is the contribution from renewables as opposed to just plain diesel-fired power generation. So there's a bit of finessing going forward there. And we also will do some smarter things that we left off the table in the PFS, and that will be about management of material movements, how we can schedule and so on, and particularly another aspect we get out of the metallurgical thing is, in fact, we understand that what they say is the waste characterisation. So we know if we actually take lead out of the tailings, then we've got a more benign tailings. We can do some different things with it. So there's some swings and roundabouts certainly in what the cost profile would be going forward. But having said that, the flip side of it is that everyone points to a much higher silver price. You only have to, in fact, since we last spoke, the Silver Institute have released their statistics, and silver consumption this year is up 16% on last year. I've kept saying that electric vehicles, solar panels and so on are going to consume more silver. The silver consumption now is over 1.2 billion ounces. Production's about 900 million. So something's going to move here soon. And I think that we'll see that in the gold-silver ratio, which is still sitting at about 85, not 65, where everyone thinks it should be.
Right. Okay. Well, silver does have that kind of utility to it, whereas gold perhaps is suffering from that lack of utility, certainly in terms of sentiment in the marketplace at the moment. So it'll be interesting to see how the precious metal market as a whole develops. Just in terms of what I alluded to in terms of wholesale change, we've seen a lot of companies having to rethink their strategy for how they get into production, how they develop the project. Now, clearly, at PFS stage, you've got a ways to go yet. But is there something in the back of your mind saying, well, potentially, do we look at a smaller start in case if capex numbers do get ridiculous in ratio to our market cap and in ratio to our ability to raise capital, cheap capital? Have you got a kind of plan B in the back of your mind?
Yeah, and look, I may have talked about this before. I sort of have this term I talk about, the sort of natural harmonics of an ore body. I don't know who made that up, or maybe I did. I'm not sure what it means, but the size of this ore body doesn't lend itself to be mined as fast as we presented it in the PFS. The reason we did that, though, is because it's really just a dirt-moving exercise. The bigger gear you can get in there, the quicker you can mine. But it actually created some stockpile and working capital things for us. So there is a smaller, scaled down, less than 1 million tonne option, but that also means we've got to deal with some other fixed capital costs, which are road construction and things like that. But we do have an opportunity to do so. And the other thing is, if we can slow it down, it ends up with a greater than a 10-year mine life, and financiers love that as opposed to a 6 or 7 year life. So we've got a couple of things that we'll certainly look at.
Yeah, I mean, it's interesting that sort of the balancing act there, isn't it? You can sort of see why people want to get into production earlier with a smaller project with sort of cheaper capital because it's less dilutory, but at the same time, some of the fixed costs don't change for a big project or a small project.
That's right. You've got to get power and water there and access for people. So, look, just one thing you did touch on was rare earths, and it's not a main game for us by any means. We're sort of accidental heroes in having found some rare earths. I say that with a little bit of tongue-in-cheek because we're actually not sure what we've got. Ironically, rare earths aren't all that rare, and as you know, many people are finding them. It was and credit to our new chairman, who was a professor of geology at the University of South Australia, and he said, look, I think you're in the right environment. Why don't you go back and re-assay some of the areas that you've had a look at? And in fact, the Apollo drilling where we got that great silver intersection, we went back and re-assayed some of the upper areas. We clearly don't chase the whole suite of rare earth minerals in our assays. And lo and behold, we came out with some great numbers. I just put a full stop at the end of that, because you can have great numbers, but you may not have recoverable rare earths. And we've taken those samples. They're in the ANSTO lab at the moment, going through the metallurgical process. And if it turns out that we need a pH of 1 to extract 50% of the material, we'll just leave it in the ground and move on. But interesting sort of sidebar topic and conversation for us. That added a bit of interest to the project. We have about 100 kilometres of that stratigraphy right along that fault. We'll keep having a look, but certainly rare earths isn't our main pursuit. Silver's our game.
Okay.
Yeah.
No, but say with rare earths, you can. I think potentially companies destroy a lot of value if they go chasing something which will never actually make it out of the ground economically. You can always point to increasing prices,
we certainly hear, and I never like speaking ill of my peers, but we hear a few people who are staring at the ground, shuffling their feet, wondering what they're going to do with the results. But so we've never professed that we've got something there that's worth anything. It's an interesting technical pursuit at this stage.
Absolutely. Okay. Again, very honest, because some people go chasing the headlines, go, we'll put rare earths in there because it's topical at the moment, might get us an extra few shareholders, but it's doomed for disappointment if you don't actually go and deliver on it. So I appreciate the honesty. It's silver focused, lead byproduct. You're kind of going through the phases with regards to economic studies and the, as you say, the kind of boring stuff on the ground that needs to happen. What does 2023 hold for your shareholders or anyone looking in at this?
Sure. So we'll close out the DFS by the end of the year and represent CapEx and operating cost numbers. So we'll have a clear understanding as to whether this is a financeable and doable project. We wouldn't be doing that work unless we were thinking we were heading down that path. Having said that, we're chasing known mineralisation now. We have intersections that can add as feed or resource that can feed to a Paris plant in concept. So whilst we're focused just on the current resource of 50-odd million, which I think will extend with this current drilling, we're also looking at some regional opportunities. The real key thing for us raising money was that we can get on with this project and get on with the plan and not have to worry about and not have shareholders thinking, God, when are they next going to raise funds? Clear, we've done that, put it on the table before Christmas. Happy New Year, and we're away.
Well, actually, I think as Merlin pointed out in the last interview, your shares have actually done reasonably well compared to certainly your peers and certainly compared to the rest of the market. So raising money now allows you to be sort of, you're not cash constrained. You've got optionality in terms of how you spend it, how quickly you spend it. So it'll be interesting to see what you guys do next year. But look, Andrew, appreciate the end of year roundup for us. Great news on the raise. Glad you got that away, and glad your main shareholders, following their money, as it were. It's a good indication. So we'll see you next year. Look, Matt, great wrap up. I'm sure we'll have a few presents under the tree that we'll be able to reveal next year. So.